Simplicity is the final achievement. After one has played a vast quantity of notes and more notes, it is simplicity that emerges as the crowning reward of art. That was written by Frederic Chopin, the famous composer. And what I find so interesting about those comments by Chopin is when we look at what we do and we look at just the world of music, how he recognizes the reward of simplicity. It's the crowning reward. It is for us too, because what we do is we listen to a symphony of sometimes a cacophony of voices out there that say all sorts of things about what's going on in the market. Whether you're tracking a single stock, a basket of stocks like an index like the S&P 500, the NASDAQ 100, or 20-year bonds like we track, or gold. And what we have to do is we have to simplify what it is we're hearing and we're seeing down to what really counts. And for us, what really counts is, of course, price movement. And the number one thing that counts the most for us, over and over and over again, accurately, are weekly vertical crossovers. We have trademarked that term. We have come up with that. And we look for those crossovers again and again and again. And guess what? They work again and again and again. Why do they work? Because they show waves of price movement, big waves, cresting, whether for up movement or down movement. And once they crest, and I like to surf, and one of the things that you notice when a wave rolls over, it rolls over, and it is going to come down no matter what. Well, price does the same thing, coming down and going up. And typically, when it makes enough movement that it crosses over in our price percent oscillator going up or down, it's going to go that way for a while. And we have seen it repeat that pattern week after week, month after month, year after year. We've seen it this entire year. Go back, look at all of our weekly vertical crossovers and see how they work time and time and time and time again. Now, let's jump into these charts. Oh, and I plan today at the close of recording this for you. We've already prepared our keynote, so we've got all the graphics ready to actually do our training, our first training, an introduction to options for you. Very excited about that. Going to try to knock it out today, if not today, tomorrow, but I plan on knocking it out today if possible and having it to be released to you tomorrow. And it's just a warm-up for our special 3-month training, our accelerated chart mastery course that we are going to have for you. It's actually not just a chart mastery course, it's a market mastery course, including technical analysis, which is what we talk about here every day, options, and creating your own personal wealth fund. More about that later. Been fulfilling book orders today. Hadn't ordered the book, get it. We've sent out a whole bunch today, and again, appreciate all your support. Let's jump into these charts. Remember, we had that weekly vertical crossover going down back on the week ending the 9th of August. And we had wonderful, beautiful, sweet down movement that following week, and quite a profitable amount of down movement. Our jumping in point, those of you who will recall as I talk to you right now, I'm trying to find it here in my notes, and we had a great jumping in point on the S&P 500 and the NASDAQ 100 at the same time. And of course, previously, we had great jumping in points on gold and TLT. But that jumping in point was $292.28 on Friday, the 9th of August at 355. And of course, that following week, we had things dip all the way down to 282.39. Where did things wrap up the day? We had a down day on Tuesday. They wrapped up at somewhere around 190.09. So again, still well within the profit range if you didn't take advantage of that huge dip down. Of course, down again for the day. And we still have the weekly vertical crossover, of course, in effect. So far this week, we have a green spinning top. It was a green open box candle yesterday, but with the down movement today, it's gotten smaller. It's now a green spinning top, means indecision tending up. We see that the derivative oscillator is gaining downward momentum. Price percent oscillator moving down quite nicely. That weekly chart, still a lot of downward pressure on the market. Go to the 2-day chart. Now, the 2-day chart, the last candle represented movement on Friday and Monday. And of course, this represents movement on just Tuesday. So it's just the first day of the latest 2-day candle. And of course, we see that it's a green open box that is forming after a green spinning top. The derivative oscillator is losing downward momentum. Price percent oscillator is actually heading down. Yes, it is heading down. It had been heading up, but with that down movement for the day. Now, we do see that we have a green open box candle there, and it is firmly pushed through the 2-day trend line. So that is something to pay attention to. It's also pushed through the 50-period moving average line. It's just the first day of this latest 2-day candle, but that's important to note. We look at the 4-hour chart. We had 2 days of strong up movement. That's 4 4-hour candles. That ended on Monday. And for Tuesday, of course, we had a spinning top in the morning, red open box, and then a solid red spinning top in the afternoon. Indecision tending down, getting stronger throughout the day. Price percent oscillator might have gained a little bit, and the derivative oscillator lost some energy. The derivative oscillator gained a little bit of energy. Price percent oscillator lost some, and of course we ended the day. Now, does that mean we have a jumping in point going down again? We do not. We still have some distance to cover for pulling the trigger in a down play. One down movement of 0.77% for the day after 2 strong prior up days, even with the weight of the downward pressure, doesn't mean you have a jumping in point yet. Watch in the morning on Wednesday to see how things open up. And again, if we get a crossing over going down, remember, 2 days still negative, weekly still negative. We need the 4-hour to give us a trigger pulling mechanism. And when that crosses over going down, we'll sure look and see how everything else looks. And if indeed that occurs, then we want to be prepared and ready to enter into a practice trade. Now, much of the same thing is going to be said when we look at the Qs. It was down for the day 0.77% also. And what we have there as compared to the S&P 500 is we have a bigger open box candle, no wick on the bottom, wick on top. So there's more up movement so far this week as far as that candle has formed. Price percent oscillator is heading down. Derivative oscillators gaining downward momentum. So again, the pressure is for down movement still. We look at the 2-day chart, and of course we compare that to the S&P 500, and we can see that again the candle is bigger. The derivative oscillator is losing downward momentum. Price percent oscillator heading down about the same angle. So again, still downward pressure, but that 2-day chart actually blew through the 2-day trend line back on Monday. So again, moving further above that 2-day trend line. We go to the 4-hour chart, and of course, we can see, again, not as strong a down candle at the end of the day. So again, we'll just pay attention. The price percent oscillator still heading up, derivative oscillator gaining momentum. So we'll see after a morning and an afternoon down if indeed we're anywhere near a crossing over going down on that 4-hour chart to give us a trigger pulling mechanism to jump into another down trade. Remember, we're still poised on both of our S&P 500 and NASDAQ 100 for down trades with that downward pressure, and the 2-day and the weekly moving down still. So keep your powder dry. If you're still in those trades at all, if you left a portion to ride on the market, continue to pay attention, particularly to that 4-hour chart. See how things continue to move, and do be aware that you have violated your 2-day trend line on your 2-day chart. And again, those 2-day candles will finish drawing at the end of the day on Wednesday. Let's go to bonds. up quite nicely, 1.03%. And what do we have? We have a nice green up candle. If I remember yesterday, it was a red open box candle, so it switched over to green. Prices, of course, above both the weekly and the 2-day trend line. Price percent oscillator heading up, derivative oscillator gaining upward momentum. Go to the 2-day chart. First day of the latest 2-day candle, green open box. Hadn't reached a higher high, though, on the wick as it did back on the 2-day candle representing Friday and Monday. So again, derivative oscillator losing momentum. Price percent oscillator still heading up, so things are still positive and triggered if, and the if is, let's look at the 4-hour chart, if we get a crossover going up on the price percent oscillator. Derivative oscillator still gaining downward momentum. Price percent oscillator heading down. A day of upward movement. Actually, yeah, a day and a half, sort of, but a firm day of upward movement doesn't mean that that downward pressure on the shorter chart is over. So we'll continue to watch and see a crossover going up. Then, of course, we want to keep riding bonds and see them move up. Still in the summertime trading zone, waiting to move out of into the transition zone and into the fall-winter trading zone where, again, things don't necessarily go in one direction or another, but they're far firmer, stronger, and longer. And again, charts don't get as wacky with back and forth movement. Typically, doesn't mean in this crazy economic environment that we might have insane swings. Not going to rule that out. So let's move from bonds to gold. We want to start always with the weekly chart. Still have that red open box chart on gold. It was up 0.78% for the day. Price is above the weekly and just below the 2-day. Derivative oscillators losing momentum. Price percent oscillator still positive and heading up. 2-day chart pretty flat, moving down. Again, we had the Friday and Monday 2-day candle be a red doji. We've now penetrated the 2-day trend line on that 2-day chart. And this first day of this latest candle is a green doji pretty much with little bitty wicks on the top and bottom. So indecision. It appears to be tending up as far as the Heikin Ashi goes, but again, that all-important price percent oscillator is heading down. Still positive, still ready to take off and move up. 2-day and the weekly still primed for up movement, but look at the 4-hour chart. We had up movement in the morning, up movement in the afternoon, which was nice with a nice wick on top, not a big green candle, but again, a green open box candle, which is positive. That price percent oscillator flattening, but still heading down. Derivative oscillator losing downward momentum. So again, keep your eye on gold. Gold switches over on that 4-hour chart in the morning. Might have a jumping in point in the afternoon for a practice trade. So watch. Remember, all of our charts are poised with the stocks are poised going down with both the 2-day and the weekly primed for down movement, which means you can jump in when that 4-hour chart rotates in that direction if it does. And the opposite is true for gold and bonds. The 2-day and the weekly are primed for up movement there, and you're waiting for the 4-hour to rotate over, cross over to give you the trigger pulling mechanism to jump into a practice trade. That's where we are, folks. I'm loving it. Hope you are. If you haven't purchased our book, look in the show notes for the link. And again, I am about to start working on that options training for you. We've got a great training for you today. It is on liquidity, something you have got to be aware of. It is one of your keys to success. How do you get that training? Well, of course, you need to be a subscriber at chartingwealth.com. Just go to chartingwealth.com, put in your name, email, address, sign up for the daily market review. You'll get them every single day, and attached in there is the special training that we put out on a daily basis. And guess what? That's how we're going to release our options training. So if you're interested, you got to go to chartingwealth.com first and sign up. That's the way we're going to release it, through our daily email. That is called our daily market review. And then once a week, of course, our comprehensive review and forecast that encapsulates the whole week. We do that at close of the market on Friday and have done it for years. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.